26 years of CNBC-TV18.
Good time to welcome in, a market expert, market veteran as well, Manish Chokhani, Director, Enam Holdings, who joins us on the show. Hi, Mr. Chokhani. Good afternoon and good to see you in. It's always a pleasure to talk to you, sir. You've been a friend, to the channel, and it's been great interacting with you over the last many, many years. And obviously, CNBC-TV18 even before I came on board. Tell us how do you feel today, first, about our 26 years?
Well, thanks for having me, Nigel, and congratulations on 26 years. I'm looking at you, looking young and handsome, and I can only think back to once upon a time, I was like that too. So thanks for reminding me of how one looked when one was much younger. But I would like to say, though, that, there are few institutions in India which have stood the test of time and kept the trust of every citizen going. Our army being, of course, right on top over there. And there's so many institutions, the Election Commission. But in that list, I would like to add the capital markets, which are always on and always functioning and always helping people to get wealthier as time goes by. And like the famous old saying said, that you can, if you want to feed a man, give him a fish, but you want to feed him for a lifetime, then you teach him how to fish. Right. And in that context, the work that CNBC and others of your profession have been doing is just simply outstanding to actually bring the capital markets and wealth creation to every citizen of India and help them participate in this incredible wealth creation journey. So thank you for that.
All right, that's heartening to hear, Mr. Chokhani, and thank you for those words as well. Before I joined CNBC-TV18, I obviously was following you, and thanks to CNBC-TV18, the brand, that I get to interact with you more often as well. That said, we are celebrating our 26 years, but the market's a little bit subdued today. What are you making of the current market setup? It's a little bit worrying because we had a pretty good GDP print. The nominal number obviously was still in high single digits, which is a bit of a worry. But the RBI has pivoted. Growth focus is what they're talking about. For the time being, the market is ignoring any kind of good news. How are you feeling about the Indian markets?
Nigel, it's not a sort of T20 game in a sense. And I sometimes laugh and joke with my colleagues that maybe I belong to the sort of earlier generation which played test matches and where victory was decided over 5 days. And not as, you have in T20, if you lose 5 overs of the T20, you are out of the game. So that's not the case with, when you're investing. You have to take a longer term view of businesses that you're owning and people that you're backing. And occasionally, if you get ahead of yourself, like we did, I think in September 24, when the valuations were completely off the charts, we spent a year kind of consolidating and still hoping for this growth to come back. But when you see a single-digit GDP print and RBI has to pivot towards growth, it's telling you that there's a challenge. And while all of us participants remain optimistic and hopeful about our earnings recovery, it's also a fact that if inflation remains, this 2-3%, and nominal growth remains 2-3%, then even getting to a 15% type headline earning growth is not kind of in the bag. And a market still trading, north of 20. And again, the challenge that I know you'll ask me is, at what point do foreign investors come back and so on and so forth? The reality is, look, everyone is here chasing growth and a higher rate of return. So people happily will buy, Zomato or a lot of even the QSR type companies at 100 times forward on 27 earnings. But they don't want to buy a 5P multiple, PSU Bank, for example. So it's always growth in context of valuation that one has to think about. And our market needs to digest that a bit, that we are ahead of ourselves in many, many pockets of the market.
Manish, hi, afternoon, this is Reema here. So we'll come to the pockets where you see some overvaluation still, because it's been a long period of consolidation, 14 months for our markets to get to their all-time high levels. But before that, your own verdict and view of the global markets. Do you think this AI tech momentum continues into 2026? And if that is the case, will India continue to underperform emerging markets, say Korea, Taiwan, China, which is seen as AI plays? What is your top-down view for the global markets?
So thanks for that, Reema. That I think the AI reality is a bit like what we experienced, in fact, when your channel started, that the 99 and 2000 period where it was complete euphoria on the emergence of the internet. And it was the telecom companies which were building the backbone. And you had all these global crossings and people like that who are, going hammer and tongs at building out the infrastructure. At a certain point, the market just pivoted and said, the capex doesn't justify the returns that are going to come out of this space. And in fact, I may be off by a few months, but I don't think the NASDAQ came back to its 2001 peak until 2013. So it's not a 3, 4, 5 month phenomena. It often takes decades for excesses of valuation to get corrected. Even our most famous company, Infosys, which peaked out in 2001, I don't think took out that previous peak for the next decade. And there are a number of places where, in the US also, where these 5 or 6 companies have taken out the bulk of valuation for that market. They've in fact been underperforming emerging markets as well as precious metals. And it's showing some sort of a regime change, that there is inflationary expectation in the developed Western world, and that inflation therefore will show up in terms of higher prices for commodities, and increasingly to things like gold and silver and uranium and copper and so on and so forth. Plus emerging markets, excluding India, have already started outperforming last year, and that trend is going to continue. So India needs to correct a bit for its excesses, I guess, on valuation, and also discover our mojo and what's our next big sort of profit opportunity, which even you guys are grappling with. Because in the absence of creating our own tech and our own brands and our own way to create the next burst of external businesses, we're sort of trapped in a sort of low growth, only a market share internal grabbing kind of exercise. So we will probably tread water for a while.
Manish, great chatting with you. Thank you very much for joining in. But the point is well taken that many stocks still today are priced to perfection in India.
"26 years of CNBC TV18. 26 years of CNBC TV18.
We are joined now by Sunil Singhania, the founder of Abakkus Asset Managers, on this very special occasion today. Thank you for joining in on our very special occasion.
Thank you, and best wishes on the 26th anniversary of CNBC.
It's a lot of coincidences, right? Your daughter celebrates her birthday around CNBC TV18's birthday, and
every year I come on December 7th.
Right.
Which is a birthday. This time
that's CNBC TV18's birthday as well. We are celebrating it on December 8th because the markets were shut yesterday. And also, it's a momentous day for you. The mutual fund launches today. So, multiple occasions for celebration. We only request you to come more often to our studio here to celebrate this. And also, obviously, we'll...
No, thanks a lot. So, yes, mutual fund gets launched today. So, it's a big thing. Nigel's mother shares the birthday with Khushi. So, it's always a pleasure to be here on December 7th. This time, we are on December 8th. And as you said, Mangalam, it's a coincidence that we are also launching our mutual fund today.
Many congratulations on that as well. Sunil, it's been a year of resilience, right, for our markets. We fell to those lows in April, then we have recovered, and we have had multiple headwinds. We had the tariff tantrums and so on and so forth. But what do you see now going forward into 2026? There are still headwinds that are still there. The trade deal is not signed yet and so on and so forth. But do you believe that the markets will continue to remain as resilient as they have been this year, especially because of the domestic money that's coming in?
And I think you're right, but you're kind that we have been resilient. I think we have it's been a challenging 15 months when you compare it to other asset class, including global markets, obviously gold, silver, and particularly broader markets in India. Last 10, 15 days have been causing a lot of concern. But I think, as you rightly said, we have also seen so many headwinds, multiple small wars, and then this tariff thing just does not seem to be getting out of the way. Hopefully, I think tariff, the delegation is coming 10th of December. That is what I read in the news, and hopefully we'll have some positive coming out of it. We have seen at least world being more peaceful. Except Russia, Ukraine, most of the conflicts, at least for now, are set to rest. And even Russia, Ukraine, there are talks going on. I think domestically, both the central bank as well as the government seem to be on an overdrive. 10 lakh crores of liquidity surge into the system, 4 rate cuts totaling 125 basis points. From the government, you have an income tax cut, GST cut. And the mood is clearly to support domestic growth. So hopefully as we move forward and we go into the next year, which will also be the time for budget, we will have this momentum continue. Corporate profits have picked up. September 25 was better, not the best, but better. But our view is that if some luck on the tariff thing happens, then the next half and the year following that will be good. I think one thing which is sort of a headwind apart from tariff is the huge flow or supply of paper.
Right.
And that is meaning that all the incremental inflows are just going into absorbing that flow. There's not too much money left to buy stocks which are already listed.
Which is why we need people like you who have the money to go ahead and buy some of the stocks, etc. You know, you said that we were kind in calling this market resilient, but you've also been humble in calling it bad, because some of the stocks that I was looking at, some of the names, Shriram Pistons, etc. 1,000 in this market has become 3,000. Some of these SME bets that you've made, all of them are at near record high, if not at record high as well. So you've been good in the space that you have, the identifying mid caps, small caps, the themes that there are, betting on the Indian entrepreneurship. Are there any opportunities right now? Because I remember Nimesh had put out a piece last Friday saying that even as the indices are at near record high, in the broader markets, there are 40-50% of the stocks which are down 30, 40, 50, some of them even 60-70% lower. So in this correction, are you looking at some opportunities? What are the themes?
So we are always looking for opportunity. I think that is our job. But just to give you a little bit of perspective, I think in 2024, particularly when the election fever was on, between June 24 to October 24, we had sort of a blowout rally in some of the smaller companies. So my view is, that time they got priced maybe 20-30% higher than they should have had. And I think now we are seeing in that correction mode. Obviously, it's coincided with at least a few sectors and few companies having headwinds in terms of their profit numbers, largely because of tariffs, some because of other reason. And I think, therefore, the pain looks pretty high. Yes, there have been winners, but there have been losers also. So you're very kind in just pointing at winners. We have also had our share of losers. But one thing which we are very clear is that we cannot afford to make mistakes at this point of time.
Yeah.
And mistakes can be of for multiple reasons. One is, obviously you buy something where fundamentals are not that great. So that we are very, very clear. And secondly, if you buy something priced to perfection, then even a small disappointment leads to a big drawdown. And I think that is what we have seen. That if you are priced to perfection, then the small drawdown leads to a big correction. And I think there is what one has to be careful. Coming to your question, yes, there are opportunities, and I think it's a good time to start looking at companies, start accumulating, because you are now able to buy without impact cost.
Right.
You're able to buy at a price you basically would have loved to 6 months back, but it is going to be a waiting game.
So what themes are looking attractive right now?
So I think among the fallen angels, I would say that engineering companies, a lot of them have fallen quite significantly. Outlook is pretty good. Some of the pharma names, they have not done anything. I would not say they have fallen, but they have not done anything because of tariff issues, so on and so forth. So there you have opportunity. We are also getting constructive on some select renewable plays. It was like the darling, and suddenly in 15-20 days, it's been the reverse. But I think that segment has a lot to offer, particularly in an energy deficient country like India. So that is also where we are quite positive. And we continue to be positive on all facets of financials. I think that is a great, great play to be in.
But is capital markets a theme, considering the fact that we are growing the way we are, with the rise in the number of demat accounts? How do you play this capital markets theme?
See, it has to be. We are a large country and we are growing in terms of per capita income and also savings. And the most important thing is financialization of savings. You don't have to now teach. Everyone knows. The best way to play it is through our business, frankly, asset and wealth management companies, because 6 crore unique investors are going to be 15-20 crores for sure. I think we are less than $1 trillion in mutual fund assets. I think we have a long way to go. One single asset management company in US is $13 trillion. So I think that is a good way. But I think all parts of, I would say, financialization of savings will benefit out of it, whether it's insurance companies, custodians, exchanges, and so on and so forth. Obviously, valuation are something which investors will... I always keep on saying this because the best company and the best theme might not be a good stock if it is priced beyond perfection.
We take a short break, come back on the other side.
"26 years of CNBC-TV18. 26 years of CNBC-TV18.
Well, as promised, we, on our 26th birthday, have invited a 26-year-old, young, vivacious, inimitable Samir Arora. Samir, great to have you with us here, and thank you for being part of this journey all these years.
I'm sure I was there on day one also, but I don't remember. Please check.
No, we will check, and we will, then and now. We'll do a then and now. So, Samir, it's a bad-looking screen. I mean, you know, and I was just looking at this Fino Bank, right? There's got this RBI license. Stock is down 14%. It just, I mean, you know, you think that as an example of how bad it is.
You know, I had tweeted that on my birthday, the market went up a lot. So right now it looks like somebody is giving up on India in terms of selling. I guess I would call it indiscriminately, because there is nothing new that is happening for, okay, that one you're showing is another example. But I'm saying in general, this looks more like dumping. Now, many people say that some of the PMSs, which, you know, were exclusively or mostly into small cap stocks, are shutting because they have been doing badly for 1 or 2 years or 2-3 years. Not sure what the story is. But in general, today doesn't look like a day from which you should draw a conclusion that somebody is seriously looking at it and has decided after when the year is about to end that this is the time to sell. It looks like somebody walking out of frustration, being upset with whatever, and maybe wanting to buy some AI-related stock related to OpenAI. I hope he does that instead.
Samir,
and not Google related.
Google. And everybody, basically, that's the problem, right? Everybody seems to be on one side, which is selling. Promoters, sponsors, corporates, foreign investors. And it is the SIP money which is keeping things afloat for now.
But SIP is also ultimately the same public's money. So you can't say public this side. And you know, all this thing about the promoter selling, we do see, not literally directly the same guy who's selling today coming to us, but broadly we can see from the inflows into both PMS and mutual fund that these are the promoters who have sold, maybe not today, but in the last X number of months, because they have set up family office, or they've set up, or they've got some advisors now. So that money keeps coming back and forth. It's not so blatantly just one way in that sense. But I think it's more end of year, somebody wanting to give up, because this doesn't look like across the board everybody's decided today morning that when everything else is broadly okay, there's no extra incremental bad news that you have to hit literally every stock down 3-4%, 2-3% kind of thing. Therefore, I've seen this for too long. We have to give it a week or two, or if somebody thinks that they know something and we don't know, mostly that is not the case.
There is no hidden truth in that sense.
And particularly at a market level, you can say that for some stock that
correct.
somebody has some information, but what do they have about the market?
Although, Samir, one thing I'll tell you, this growing feeling that we are kind of stuck, that nothing is moving. You know, RBI has cut, but you know, beyond that.
So all the things that we could have done, we means the government or the system could have done in terms of other than just directly buying stocks, they have done. And therefore, it may take some time to feed through, but these things are not wasted. You can't say that, oh, when they cut the rate that day, the market didn't go up, or the next 2 days, therefore what a waste. Now we need to do something more specifically for that. So if you've cut these 3, 4, 5 things, and in general, the market has corrected, and the rest of the world is not falling apart. I still can't imagine that somebody is using money from India to fund an investment in some other market, because the Indian market in general has done well over time, and this year it has massively underperformed. So it's very unreasonable to think that somebody is selling a market which has underperformed by 28-30%, which means broadly, and if they buy some moving stock in that other market, it is up more than 30%, since their index is up 30%. So that means they're already giving a 50-60% or 40% spread in selling some Indian stock and buying some whatever they are doing with this money.
But although in that during the course of that underperformance, maybe the underperformance may have been caused by that. that India was used, because it was very expensive, it was used as a funding market too. And this is a point which Neelkant was making a couple of weeks back, etc. Now, this SIP...
I don't think this funding business works. For just to give you the weight. So if you're a global fund manager, then India's weight in that will be plus minus, say, index weight, which might be less than 1%. Now, you think that because obviously they're not making it zero. Because if you see in aggregate, they have sold till, I think 1 or 2 days ago, $17 billion year to date, in which January alone was 10 billion. That means from February to today, they have sold $7 billion on their own aggregate AUM of, say, 800 billion. So they have sold 1%. So what I mean is, if somebody's weight is 75 basis point and 1%, and you suddenly feel that you have to buy some other market, it's highly unlikely that you do it, that, okay, I will reduce this 10 basis points here and buy Korea with it. You can fund it if you so desire with the balance 99% that you have. So don't call it a funding market. Somebody doesn't like it, they have lost and they are out kind of thing, but hardly that suddenly 1 day later, 10 days. Funding means that 3 months later, they'll come back with that logic. I think people who are selling and people who are buying will buy. Not all the time is it a movement from one market to another.
Thank you very much, Samir, for joining us, and thank you for being with us on this special day.
"26 years of CNBC TV18.